So we have that question on the screen, pricing decisions, and then it's saying a company is selling a product at a price of 120 per unit. At this price, it is selling 200 units per period. It has been estimated that for every 5 increase or reduction in price, sales demand will fall or increase by 10,000 units. At what selling price will total sales revenue per period be maximized? Well, we're being asked for the point where the selling price that maximizes revenue. How do we get that? Well, to maximize revenue, this is the point where marginal revenue is equal to 0. Please take note of that. So what you're going to do is that, first of all, to find marginal revenue, it actually is a derivative of total revenue. So first get total revenue so that we can easily differentiate and get marginal revenue, which we need very much in this calculation. So let's get to the other screen and let me explain this. So first of all, we're looking at the demand of certain units. So the first thing is, what is total revenue equal to? Total revenue is equal to price times quantity. Well, we've been given details about price and the changes if this is demanded, like the change of price against quantity. If you saw, they said that if it increases or decreases by 5 kwacha for price, then for quantity they gave us that if it increases or decreases by, so increase or decrease by 10,000 units if the price moved. So that is basically a change or a relationship of the price against the quantity, and that change is what we would call our gradient, which I'm about to show you which later it represents. So all we just do first of all is come up with the demand equation, which is A minus BQ. Okay, where of course the B is the gradient, the one I was just from showing you as a fraction, the 5 over 10,000, because gradient is basically that change. If this happens, that change, it will be depicted by the gradient itself. So P, they told us, okay, the current selling price there was 120. A is not known, minus B, which is the fraction, 5 over 10,000, the gradient, and Q. Of course, we're given some other units in the paragraph that, okay, 2,000 units, yeah, could be was the output. Yeah, so I'll come and just show you very soon how we are going to use that information. So of course your end game is to get to the, of course, the marginal revenue equation, which of course has to first begin by getting total revenue. So what you first do is solve for P, so that when you get to the total revenue equation, you can easily go and substitute what P will be equal to. So okay, to solve for P, there was this element here. Yeah, the letter A is not known. The first thing is you have to find the same value of A first. So just change the subject. A is equal to negative 120 minus, I think I'll just change this as a decimal, 0.0005Q. That's that. And then what you do is that that Q now can be substituted at this point. And the Q will be those number of units that were mentioned in the paragraph, the 200,000 units. That's what you substitute, because what you're doing is you're doing so first for A. We know A is in this original demand equation, and you want to know first of all what value of P you are going to come and substitute there in your total revenue equation. So when you come and substitute 200,000 here, what answer do you land with on A? You find that A is equal to 220. Having known A, we can rewrite the demand equation, which is A minus BQ, as 220 minus 0.0005 Q is equal to what? P. This is the equation for the demand now. Okay, you would wonder how come again I've put Q. Well, what we're just trying to do was that we were trying to make okay, P the subject, of course, of the formula, and coming to find who will substitute in this equation, total revenue equation, which is P minus Q. So the first thing is first determine that demand equation. It's very, very important to determine the demand equation, because it is that value of P that we come to substitute here in the total revenue equation. So the demand equation, initially it had A was not known, and if A is not known, first solve for A, and once A is known, you get a proper demand equation, and then you get to substitute there. So it's going to be like P times Q, that's what the formula says for revenue, right? So hence P is now 220 minus 0.0005Q, close brackets. There's also Q again outside there. Q distributes in the brackets, 20Q, 220Q, 0.0005Q squared. There goes Q times Q is Q squared. And then at this point, you've made the total revenue equation. Okay. Now, what about marginal revenue? Marginal revenue, first derivative. How do you differentiate? You can use the power rule by just saying, okay, this Q is as good as to the power 1. So what you just do in differentiation is that you just subtract 1 from the power. Okay, when you subtract 1 from the power, it will be to be as good as 220. This side as well, what you do is that you drop the power, you drop this 2, which is the power, multiply it to this coefficient, and as well subtract 1. That's the ring differentiation. Hence, what are we going to end up with here? Once you differentiate, this is how marginal revenue comes out. Just once you just differentiate once, that's why they say first derivative. That's your marginal revenue. And then you equate it to 0 and try and first solve for Q. Once you solve for Q, go and put it back in the demand equation to find P. That's what we're going to do. We have this equation as the marginal revenue at this point, equate it to 0 first. This is how you maximize revenue. You equate marginal revenue to 0. So for Q, 220 is equal to what? Is equal to 0.0001 Q. Divide both sides by that. In fact, it's just supposed to be 0. Just 2 zeros there. Q over that. You get 220,000 as your value for Q. Hence, take it back into this equation now, where we had, of course, A minus BQ. We already had our equation initially, where A was 220, B was our gradient of that Q. Now that we know Q, this Q, why we are now using this Q now for maximize, because this Q has come from the equation of marginal revenue being equal to 0. Hence, it is equally a profit maximizing output, and it will help us find the profit maximizing revenue maximizing price by just putting it in there. That's part for Q. So you take this 220 here, where there's this Q, and you tell me that your price will become 110. That is the selling price that maximizes revenue. That's the procedure that you take, and that's it.